Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Good to have you with us here at AusBiz as we take a look at what happened overnight. It was all about tariffs and it was risk off for investors ahead of President Trump announcing levies on car makers. Stocks on Wall Street tumbled, dragged lower by mega cap tech, but Tesla shares, they plummeted while shares of other car makers also fell, including Ford and General Motors, ahead of an announcement from Donald Trump. We'll get to that in just a moment. The heavyweight chipmaker Nvidia fell, as did Broadcom, which sent the chip index down some 4%. It follows news that Microsoft may be ditching plans for new data center projects in the US and Europe. US listed shares of copper miners rose, tracking the commodity price high, helped by expectations of import tariffs that President Trump may impose on the metal. Elsewhere, Dollar Tree rose after the discount chain said it's nearing a sale of its family dollar business to a consortium of private equity investors for about $1 billion. And GameStop shares surged following its board's unanimous approval to incorporate Bitcoin as a Treasury reserve asset. Well, President Trump has announced plans for long-promised tariffs on automotive imports due to come into effect on April 2nd, widening the global trade war in a move car industry experts expect will drive up prices and stymie production. The US administration saying it will impose 25% tariffs on all cars not made in the United States, which will also apply to light trucks. And he's also flagged tariffs on pharmaceuticals. Additionally, President Trump said he may give China a little reduction in tariffs to get a deal done on the Chinese-owned TikTok. Now, more tariffs and a global trade war raise the spectre of rising inflation. FOMC member Alberto Mussolem, they're cautioning that inflation could stall above 2% due to the effect of tariffs, saying I'd be wary of assuming that the impact of tariff increases on inflation will be entirely temporary, or that a full look-through strategy will necessarily be appropriate. I'd be especially vigilant about indirect second-round effects of inflation. Whereas fellow Fed member Neil Kashkari said we're in a very good place to just sit here until we get a lot more information on the tariff front, on the immigration front, on the tax front. I'd expect the Fed funds rate to be modestly lower at the end of this year. Well, US Treasury yields inched higher, the US 2-year hovering around 4%, the 10-year was around 4.35. Markets are pricing in a 70% chance the Fed funds rate will be cut by 25 basis points by June. And the US dollar rose ahead of the month end, and the more risk-averse mood, the Aussie sitting at 62.9 US cents, and Bitcoin is trading just under 87,000 US dollars. Oil prices, they've risen as data showed US crude oil and fuel inventories fell last week, while there are concerns about tighter global supply as the US threatens tariffs on nations buying Venezuelan crude. Brent crude futures up 1% at $73 a barrel. Copper is up around 0.5%. Iron ore sitting at around $102 US dollars a tonne, and the gold price little changed at close to $3,020 an ounce. So let's get to the latest we've heard from Donald Trump, the effect on markets. Ira Epstein joining us from Linn Associates. Ira, welcome back. Good to see you. Of course, we just in the past hour did hear from the US president. We knew these tariffs were coming. What did you make of what he had to say?
Well, a bit of a surprise. The part that he went into was if the automobile is not assembled in the United States. So that is the key word that I took it, and it's permanent. So let's assume you're in Canada or Mexico and you're sending cars back and forth, or parts of them to be assembled partly there, partly elsewhere. He wants that car made in the United States. It doesn't mean all the parts have to come from the United States, but the final assembly has to be here in an auto manufacturing plant. And he made a point of saying, there are some plants in the United States that are only operating at 60% capacity. They could go higher. Well, number one, it's not as easy as it sounds. Number two, not everybody manufactures here. Even those that do, such as Honda and the like, when you look at them, and while they have plants, they do a big job, they still bring about 1 million cars a year that they assemble. So anything you're going to start ordering, and let's assume you go to your dealership, I want that color combination, I want that. You better make sure it's made in the United States, because if they have to bring it in from abroad, add 25% to the car. If you have a dream list of a Ferrari you want and you want to go in and have the leathers done a certain way and everything, you just add a 25% to the car because they're not made here. I can go on with all the high-end vehicles like that. Mercedes, a certain degree of a problem will be seen there. And the president also said that the next round of tariffs, he mentioned pharmaceuticals and lumber and so on. The next round, there'll be some surprises. They won't be as severe as some people think. In fact, in some instances, they'll be less than even what we're tariffed. So he has something up on his mind. I don't know what it is, but none of this should be taken initially as bullish. If you're trading stock indices or individual stocks, take a look today at what happened with China going after Nvidia. The stock was down $7 a share as they've decided that the H20 chip might be an air pollutant. Can you believe that? They've determined it's an air pollutant. You go to their country and look at the skies, it's polluted as can be. But I get it. They don't want to take the chips. So the tariff wars are here. They're real. You don't want to be a hero, but it's going to be bullish, probably still the gold market. It'll probably put a bid into the bonds and the notes in the U.S. Treasuries as people want a safe haven. And I don't know what it means for the dollar. I don't know if it's bullish or bearish. I haven't made up my mind.
All right, just before we get some further detail then on investment strategy, is there greater clarity in terms of the automotive sector there? Ira, you're saying obviously he wants those cars assembled in the United States. What of the parts though? Is that clear as to if those companies use foreign parts, will that be taxed?
From my understanding of what he said, and that can change by the morning, but going to bed tonight, I'm comfortable that the parts can be manufactured elsewhere. The assembly has to be done in the United States.
All right, okay, maybe we'll get some further detail on that. So it still raises questions, though, for firms that are trying to make investment decisions ahead of April 2nd. Is that, well, will it be clearer, though? That's the question, because obviously we're in status at the moment, just waiting on greater clarity so firms can actually make those investment decisions.
No, they can't. It's too late. How do you make an investment decision to do X? The time factor's gone. That time was January 1st at the latest. You had to make your plans, if not the year before. In other words, 2024. So if you're just now trying to adjust to all this, you're behind the eight ball. Whatever's going to happen to you is going to happen to you. You don't know what the tariffs are going to be. We don't know how severe. We don't know all the products that are going to be included. It's going to be a certain negotiation. You know that there are people in the United States from Mexico, Canada, India. I can go on and on with the list of people that have been visiting in Washington, D.C., and lobbying, if you will, with Mr. Lutnick and others to try to get a way to get it down. Already, you heard India was trying to forego and find a way for 23 billion less in tariffs. Well, they tariff us more than anybody else. Is it enough? I don't know. Is it a beginning? For certain. So we will see. Is it something you jump out of the window in the stock market off of? No, of course not. But you also don't want to be the risk-on trader first to the game. I don't think that's going to be a smart move.
Ira, is oil going to be the next front in the global tariff war? With I see you point out here perhaps that Canada looking to bypass the US in terms of making direct sales to Europe.
Canada is really pissed at America, rightly so. We have treated them terribly. They're our biggest trading partner. This idea we should make them another state of the United States, I find insulting as an American that we're doing that. So I'm against those type of things. They have long been our closest neighbor. We have the largest border in the world that, for the United States with them. No, I think that they won't do anything. They will make all the noise. They will do what they have to. And the reason why, Andrew, is simple. April 28th is the snap election. So now is when you talk tough. You want to get the voters that want you to stand up. The other people, Polave, will want to get people to go, no, you've got to work with Trump and get this all through. So that is why you're hearing all this. We will see what happens. Obviously, there's whoever's in control can make the decision. We don't know that Mr. Carney will be in control. He's behind in the polls, but by a small amount. He has done a miracle in making this race very tight. Now the question is, what do the people want? And we'll find that out April 28th.
Ira, when we look at the bigger picture, is it on track for Donald Trump, his objectives there, particularly perhaps using tariffs as that negotiating tactic with his trading partners?
You know, you and I were talking before the election, and my comment then, I looked up some of what we were talking about. I said when he gets into office, he has 4 years to make himself a legacy, but the reality is 2, because it's the first 2 years that you have your political capital. After that, especially a president that's a lame duck president, that's the game. So do I think he's on track? I think he's probably ahead of where he thought he'd be at this point in time. This isn't over. He still has the U.S. tax bills to take on. The tariffs are, you're going to look in your rear view mirror. He said what he said about tariffs. He said what he would do in the Houthis. He's now said today, every night for 5 nights, they're hitting them and hitting them hard. I see little press on that, but I believe what he's saying. You saw in Gaza, they didn't want to come to the table. Hamas. You see the pounding, and Israel's been let loose on them. When's the last time you heard a word out of Iran? They are suddenly very quiet because he told them, do one thing and we're coming after you. So if you don't think he's on track, what do you think he's on? He's on a speedway, that's for sure. And he's going to get done everything he can get done in the shortest amount of time you can imagine, because at the end of 2 years, another election comes, he won't have this political capital the last 24 months.
And in the short term, will there be casualties, particularly the US economy? Do you feel as though that is in jeopardy as far as growth is concerned?
Yes, it is. But the long term, it's probably get stronger. In other words, what he's doing isn't going to be for one president. It's going to be once these factories are here and once these events are here, that's it. No president has used in modern time the might of the American economy. I'm not saying military, the economy, the way this president has. Whether I'm pro or non-pro, Trump doesn't matter. That's not what it's about. It's about he's trying to get things done and do away to a degree with tariffs. Last week we talked, I said tariffs can't go away. Every country protects certain industries, but you can reduce the impact of them. And America's not been willing to do that since World War II. The game is over. A new guy's in town. And it's not my opinion. It's the reality of the fact.
Ira, thanks for joining us from Linn Associates.
Thanks for having me.
Let's come back home, take a look at where we're likely to open, looking for a negative start, certainly given what we saw on global markets overnight. So SPY futures off almost 0.5%. Stay with us. We are getting it right across the open in just a couple of minutes.